Thanks for taking a free trial of Portfolio Builder. In this video, it is July 22nd, and we're going to review our track record and how our program works. Now, if you're still on YouTube watching this, just click the link below and sign up for your free trial. There's no credit card required, and I've got good news. Even though we're advertising a 1-week free trial, we're doubling it. You get 2 weeks free. My goal is to make you so much money in the first 2 weeks that you'll have no qualms paying for our membership after we've proven we can deliver. So let's take a look at what we have. This is our Monday, Wednesday, Friday trade alert covering the SPY ETF. It trades at noon Eastern. Currently, we recommend that you have a 45% position in equities, and this is the best bet for trading equities. SPY ETF taking advantage of the option market that has 3 expirations a week. Now, the next most important part of our portfolio is the Thursday trade alert, also at noon Eastern. It exclusively trades the TLT. Very rarely it might buy up Google or Amazon if it's down a lot, but 99% of the time it's trading the TLT. That's the U.S. Treasury 20-plus year bond market. So in general, if we have 45% following the SPY and 45% following the TLT, you're going to find just by doing that all in itself, it's very hard to lose money. When one goes down, the other goes up. In general, they're both going up together. Now, this portfolio had been underperforming the SPY until recently, and it just shot up a little bit higher. So it's at 10.76%. And again, our goal is to just simply deliver 1% a month and almost never lose. Now, we're taking part of the profits from selling call options on the TLT and also investing that into bigger bets that can generate a higher rate of return on the gold market. So we'll get into details of how that works in a minute, but let's talk about the last aspect of our portfolio. We also give out recommendations on cryptocurrency. So this was up 200%. It launched at the same time. All of these launched December 2018, middle of the month, during the middle of that huge sell-off, the Christmas massacre. At that point in time, the Fed was promising to raise rates without question and continue quantitative tightening. And as we all know, in the last 6 months, they've completely reversed that. And so we've begun to recommend a bigger and bigger position into gold, silver, and cryptocurrencies. So these are all very correlated assets, and we're currently recommending 10% of your portfolio buy and hold this. So actually, just as of making this video, we went from having an initial deposit of $25K and pushing it up to $75K. So now the return on investment only reads 64%, but that's because we just diluted the profits by tripling the initial investment. So we're becoming very certain that the central banks will be having to lower rates and print money, which is very bullish for these assets. So currently this is recommended to be 10% of your total portfolio. In a minute, I'll get into how this little calculator can tell you exactly what to buy and sell to replicate what we're building. And again, you do get a copy of this spreadsheet during your free trial. So that'll be emailed to you separately. And in every trade alert video, you'll actually have a link to this spreadsheet. So again, if you're on YouTube still, you want to get a copy of these spreadsheets, follow our trades free for 2 weeks, click the link below, sign up. Our goal again is to make you enough money during the free trial to pay for your membership. Now, the last portfolio I want to show you is our Tuesday SPY alternative trade. This looks at what the SPY ETF actually buys for you. And primarily, it's these 8 companies. So people are buying up the SPY in about $16 billion a day of trading volume. The SPY just goes and reallocates that capital, and the bulk of it goes to these 8 companies. Now, we have stripped out Berkshire Hathaway, Google, and Amazon because they cost upwards of $1,000 a share. And our whole system relies on having multiples of 100 shares because we like to sell call options to finance a put option, and also typically generate profits even when the market's flat. So currently, this one's all in on Apple. Apple has the best deal in terms of the covered call income, and it has a long ways to go to break into new highs. Also, it's the #1 position in Warren Buffett's portfolio. And so to get a better idea of which stocks I'm selecting in the Tuesday trade, you'll want to pay close attention to the video that is released on Tuesday. Now, as you can see, it does have the highest return, sitting at a 16% return. And just realize this portfolio has a bigger risk to reward ratio. The S&P 500 is very hard to crack. It represents 500 companies. Apple could quickly become the target of the trade war. Now, that's not super likely, because if China were to attack Apple, well, heck, Apple employs 1 million people in China. So that's one reason we like Apple. Also, the US government just stabbed one of Apple's biggest competitors in the back, Huawei. Not to mention, it has $1 trillion to buy back its own stock. It's really a great company. But from time to time, we may change exactly which stocks are held in this Tuesday trade. So it's considered either an option or an alternative to the SPY trade. Some of our clients like to put a half of their equity portfolio into the Monday, Wednesday, Friday, and half into Tuesday. Some like to only do the SPY because it's safer, and some only like to do the Tuesday trade because it's less work and can potentially deliver a bigger gain. So it's totally up to you, but just know daily I will remind you of what our general recommendation is. Now, you can also travel to our website and look at all the trades that have been posted historically for each of these programs. If you want to go back and look at how it all works, let's just look at a typical trade alert. Now, I do want to throw out that at least half of our clients really don't want to use a spreadsheet, and that's why I've designed this to be so easy that you can do it in your head. Some of our clients are very analytical like I am, and they want to track it all in the spreadsheet just like I am. So it's totally up to you. Just realize every trade alert is what I call self-destruct. Have you ever joined an advisory service and they had a whole bunch of positions on and you didn't really know how to replicate it in the current time frame? That's a big problem. So our product doesn't do that. It never builds up positions over time, and that means new people coming in will get the exact same result as everyone else. You know exactly when the trade alert's going to come out, and we're only trading extremely highly liquid products so that we can't move the market with our audience. Now, just realize the first time you enter into a trade alert, you're going to skip step 1 because you never entered the initial covered call. So at the top of the email is always a video. If you play the video, you can see how to do the trade and get my commentary. This trade summary is sent to you via text message and at the top of the email. It summarizes what we're doing. Step 1 will show you how to exit the previous trade. Step 2 will put on the new trade. Typically, we are doing what's called a caller. That means we sell a call option, and I'll zoom in on it. So we'll sell a call option, typically above the trading price of the asset, and we'll buy a put option below the trading price of the asset. And that's if we think the asset will go higher. Now, if we thought the asset was going to be in a long-term downtrend, we would simply move the strike of the call option below the trading price and the strike of the put option above the trading price. And you basically get an upside down caller. Let's take a look at the risk reward that's typical for one of these trades. So as you can see, in every update, I will show you the maximum risk and maximum profit that we enter into the trade alert with. And because we buy put options underneath our underlying asset, there's never a risk of a huge loss in any given trade period. That means we can sleep like a baby and wait until the next trade period to manage the position. So typically, we'll be looking for a slightly bigger risk versus the profit so that we get a highly probable win. And in our program, we have a very high win rate. That doesn't mean we win all of the time, but in general, we win more often than we lose, and that's how this pans out to make a very consistent income with a target return of around 1 to 1.5% a month, at least in the SPY trade. Now at the bottom, we have the option volume. This is how I'm picking the strikes. I'm not trying to guess where the SPY is going to go, but what I am interested is where has Wall Street put their money? And you can see in this screenshot at the open interest, There's 116,000 contracts. That represents some 10 million shares of the SPY that have to be sold for $300. So in that case, I think it's not going to go much higher than that anytime soon. So I'm happy to sell a call option right above it because it'll most likely be a pure profit for me. On the other hand, I can go look at the put option market and see that there's 77,000 put option writers at the 298 strike. That's where people are agreeing to buy the SPY. So I'm purchasing a put option right below that. I don't want to use the put option, but I don't want to have unlimited risk. So I'm getting the cheapest put option that I think I won't really need so that I can generate the highest profit from either the call option I've sold or my underlying asset going up in value. Now down below that, I will have our track record and a summary of what happened. So I'll tell you what did the underlying asset do, what happened to the call option, which we sold, and what happened to the put option we bought. And we'll spell it out. How much money did we make? So that's a typical look at a Monday, Wednesday, Friday trade. The Tuesday trade is very similar. Video up top. Summary right below. Step 1 reminds you have to have 100 shares. Step 2, skip this step if you didn't take the last trade. And you can see the typical setup to get out is to buy to close the call option we sold to open, and to sell to close the put option we bought to open. So I'll just look at that real quick. Here's how we typically enter: sell to open call, buy to open put. To get out, buy to close the call, sell to close the put. And we're just going to do this over and over and over again. So if you ever want to take a break from the program because you're going on vacation, then just go to cash. You're not going to miss out on a lot because we're not trying to make a lot in any time period. And more importantly, we're much more concerned with not losing money. So if we have some flat months, I'm perfectly okay with that if it meant avoiding big risks. Now if we go a little bit lower, you can see the option chain that we're looking at to pick the strikes, telling you when the next trade will happen, and giving you a summary of our profit over the previous period. And sometimes I'll go point out, all right, well, what if we can pull this kind of profit, which usually looks small, 52 weeks a year? Or in the case of the SPY, 3 times a week, 52 weeks a year, 156 times. Okay, so moving along, we're now getting to the Thursday trade. Again, I can't stress how important it is to have around half of your portfolio in this trade alert. It will really balance out your portfolio and make it extremely hard to have a losing month. Now, once again, we're still not just winging it. We still do the same setup. So we can see, in this case, we sell to open the call, buy to open the put. Strike is above the trading price on the call. Put option is below. That's if we're betting up or flat. Now, if we wanted to bet that TLT was going down for a long period of time, we would just move the strike lower on the call and higher on the put. So it's a very simple switch, and we can essentially flip this risk-reward ratio to be the opposite. So it's really that simple. You're going to see the trades are very repetitive, and it's very predictable. And again, the last piece of the puzzle to really insulate your portfolio, add a little extra jazz to it to help bump your return, is to follow our gold, silver, and cryptocurrency buy and hold positions. So we're not doing the option trading in this part of the portfolio. And currently, as of recording this video, our recommendation is to have 10% of your total assets that are involved in stocks and bonds holding these assets. Now, a few other reminders, and in the next video, right below this video, you'll get to see how to use the spreadsheet and exactly how to build your gold and silver portfolio as well as all the other portfolios in terms of how to enter it into the spreadsheet and let it calculate what you need to do based on how much money you have. So let's quickly go over a few more reminders, and then I'll let you, in this video, go to the next video if you want to learn the spreadsheet. If you don't want to learn the spreadsheet, then don't worry about it. The daily updates with the trade alerts will really tell you everything you need to know And in my evening updates, I'll spell out how to figure out a good gold crypto portfolio just with a little math in your head. So I'll explain that in every update in the evenings. So reminder, we have a live Q&A webinar Wednesday at 1 p.m. Eastern. This is for our paid folks. If you're not paid, you're not going to get in this membership webinar. Thursday is for our free folks. So the difference is paid people have been following the trade alerts. They have trade specific questions and they want to know what's going on in the markets right now. A little more advanced. Thursday is for newcomers. So we do invite some of our long-term customers to come share their results and talk with you. But Thursday is all about getting to know how to follow the program, very basic questions. Maybe you need to learn what a call option is or a put option or something of that nature. So that's the difference. The second you upgrade from a free trial, you'll be moved out of the Thursday webinar and into the Wednesday webinar. Now, webinars are recorded and shared with their respective groups. Trade alert schedule, once again, SPY trade alert is Monday, Wednesday, Friday at noon Eastern. The Tuesday trade, currently doing Apple, is on noon Eastern Tuesday. And Thursday, we have the TLT, which is also reinvesting part of its profits into GLD, again on Thursday. So that is our total schedule. If you ever have any questions, please call Victor for immediate help at 505-203-0396. In fact, I really suggest you pause your video right now, write down that phone number, add Victor, say Victor Portfolio Builder. If you ever have any problems at all, call him. He'll be happy to help you out. Now, this is the webinar replay page. If you want to go back in time and watch all our webinars, those can go for sometimes 2 to 3 hours. So there's a lot of footage there. And on Monday and Tuesday, I also do a 20 to 30 minute video update where I just talk about the markets, and I also cover what's going on in our gold, crypto, silver portfolio. So there's not a lot of time in the trade alert videos to do a whole lot around that, but on Monday and Tuesday, again, that's where I'll talk about how to follow that part of our portfolio and whether I think we're still a buy or a sell. So currently, the clear picture is up, so we're very bullish on that total holdings, but we're also going to review everything going on in the whole program on those Monday, Tuesdays. Wednesday and Thursday, we get very busy with the webinars, so there's no evening update. And Friday, we like to take the evening off. So your big updates that are just pure content are Monday and Tuesday, plus the webinar, which is either Wednesday or Thursday, depending if you're paid or free. Friday's a light day. And that's really all there is to our program. It's designed to be super simple, very easy to follow. We're not trying to hit home run returns. We're trying to generate around 1 to 1.5% a month total profit with very little risk to the downside. So if that's something that sounds like music to your ears, I think you're going to be very happy with our program. Now, once again, if you're still seeing this on YouTube and you haven't clicked to start your free trial, there's no credit card required. Our goal is to make you enough money in the first 2 weeks to pay for our service. Who else does that? So thanks again for your time. And if you want to get into some of the technical stuff of how to fill out the spreadsheet, then go to the video below. If you don't want to use a spreadsheet, you prefer to do this all in your head, a lot of people are like that. And I think you'll find that the trades are so easy, you can easily accomplish that.